Hold up, did you just see what happened? Bonk literally set $16.7 million worth of tokens on fire yesterday. Not metaphorically, actually burned them. Gone forever. And if you're not paying attention to what this means for your crypto portfolio right now, you might be missing the biggest Memecoin opportunity of 2025. Because what I'm about to show you isn't just another token burn story. This is a calculated move that could either send Bonk to the moon or crash it back to Earth. And the next 48 hours are absolutely critical. Alright, let's break down exactly what went down on July 24th, because this wasn't your typical crypto news cycle event. The Bonk team didn't just announce a token burn, they executed a surgical strike on their own supply. Let me put that in perspective for you. That's not just a number on a screen, that's $16.7 million worth of Bonk tokens that will never ever hit the market again. And here's the kicker. They funded this entire operation using revenue from their own ecosystem. Their Let's Bonk launchpad, also known as BonkFun, generated 217,000 SOL in revenue. That's roughly $39 million in Solana tokens flowing through their platform. But instead of pocketing all those profits, they made a strategic decision that could change everything. They're reallocating 1% of BonkFun's revenue from marketing spend directly into token buybacks and burns. Think about this for a second. They're literally choosing to reduce supply over increasing awareness. That's either genius-level confidence in their product or, well, maybe they know something the market doesn't. And the timing? Right after Bonk exploded 158% in July, right as leveraged traders are piling in, right before the Fed potentially cuts rates in September. Coincidence? I don't think so. Here's where things get really interesting, and honestly, a little scary depending on which side of this trade you're on. Bonk is sitting at a make-or-break technical level right now. I'm talking about the 1.618 Fibonacci retracement at $0.000036. If you don't know what that means, just understand this. It's a level where billions of dollars in algorithmic trading decisions get made. The bulls are fighting hard to hold this line. In fact, data from CoinGlass shows leveraged traders on Binance have increased their bullish positions from 56% to 60% in just 24 hours. That's significant capital flowing into long positions, betting that Bonk goes higher from here. But here's the tension. Technical analysis is showing us two completely different scenarios, and both are equally possible. Scenario 1, the moonshot. If bulls can defend this 0.000036 level and turn it into solid support, we're looking at a potential 46% rally to 0.000052. That would put Bonk at levels we haven't seen since the peak euphoria earlier this year. Scenario 2, the dump. But if this level breaks, and I mean really breaks with volume, we could see a harsh reality check back to 0.000025, or even May's highs. That's a 30% drop from current levels. And here's what's keeping me up at night analyzing this trade. The profit taking is already starting. After a 158% run in July, smart money is beginning to de-risk. The question is whether the token burn fundamentals can overcome the technical selling pressure. Okay, let me connect the dots for you because I think I know exactly what Bonk's team is doing here, and it's actually brilliant. This isn't just a token burn, this is a complete supply shock strategy designed to create artificial scarcity right as the broader crypto market potentially enters its next bull phase. Think about the timing Fed rate cuts coming. September is looking more and more likely for rate cuts, which historically pumps risk assets like crypto. Solana ecosystem momentum SOL is showing incredible strength, and Bonk benefits directly from Solana adoption. We're seeing renewed interest in dog coins and community-driven tokens. But here's the genius part. They've created a sustainable burn mechanism. Every time someone uses BonkFun to launch a new token, 1% of that revenue automatically goes to reducing Bonk supply. It's like a perpetual buying pressure machine. Do the math with me. If BonkFun maintains even $10 million in monthly revenue, which seems conservative given current traction, that's $100,000 worth of Bonk buying pressure every single month, permanently removed from circulation. And psychologically, this burn creates FOMO. When traders see tokens being destroyed, it triggers scarcity mindset. If they're burning tokens, maybe I should be buying them. But let's be real about the risks, because I'm not here to shill you into a bad trade. These tokens can drop 50% in a day just because someone tweets. If we break below that Fibonacci level, momentum traders will dump hard. If Bitcoin has a bad week, Bonk will likely follow. So what's my take after analyzing all this data? I think Bonk's team is positioning for a major move higher, but they're doing it the right way, through fundamentals, not just hype. The burn mechanism creates real value, the Fibonacci level provides a technical entry point, and the macro environment is setting up favorably. If you're considering a position, here's how I'd approach it. For aggressive traders, watch for a decisive break above 0.000038 with volume. That confirms the bulls are in control and could trigger the run to 0.000052. For conservative investors, wait for a pullback to the 0.000025 to 0.000028 range. That gives you better risk and reward and aligns with the broader accumulation zone. For DCA strategists, small weekly buys regardless of price action, trusting the burn mechanism to create long-term value. But remember, everything depends on broader market sentiment. If the Fed delivers those rate cuts and Bitcoin breaks to new highs, meme coins like Bonk could absolutely explode. If we get a sell the news event or a broader market correction, even the best tokenomics won't save you from a drawdown. Look, at the end of the day, Bonk burning $16.7 million worth of tokens is a statement. It's the team saying, we believe in long-term value creation over short-term marketing gains. Whether that bet pays off depends on execution, market conditions, and frankly, a little bit of luck. But as someone who's analyzed hundreds of crypto projects, I can tell you that teams willing to reduce their own supply are usually the ones building for the long haul. The next few weeks will be crucial. We'll see if those Fibonacci levels hold, if the Fed delivers on rate cuts, and if Bonk can maintain its momentum in an increasingly crowded Memecoin space. What do you think? Are you buying this Bonk burn story, or do you think it's just another meme coin pump waiting to dump? Drop your thoughts in the comments below, and if this analysis helped you understand the situation better, smash that like button and subscribe for more deep dive crypto content. And hey, if you want to stay ahead of moves like this, hit that notification bell. Because in crypto, the difference between profit and loss often comes down to who gets the information first. This content is for educational and entertainment purposes only, and should not be construed as financial advice. Cryptocurrency investments are highly volatile and speculative. You should conduct your own research and consult with qualified financial advisors before making any investment decisions. I may hold positions in the cryptocurrencies discussed in this video. Past performance does not guarantee future results. Only invest what you can afford to lose completely.